Good morning and Happy New Year to everybody. Happy 2023. This is the monthly update for the Edge Investment and Credit Fund for the month of December. December was a good month. We were close to almost 1% positive performance. The macro book played really well with the shorts on the Japanese government bonds on the expectation of less dovish Bank of Japan, which happened in December, and also our shorts on the gilts, which we think are very overvalued given the prospects of the economy and inflation in UK. Away from that, unfortunately, we suffer on our portfolio special situation. Oil Brazil, again, the valuation of the bonds went down on the expectation of a new restructure, which we do expect and we've been expecting for some time. But we think the recovery value of the bonds in most restructuring scenarios should be meaningfully higher than where the bonds are trading now. View for 2023, three main points. Inflation, we think definitely we are gonna be a bit subdued. But it's not going to go as fast and as much down as the market expects. I think the deflationary wave is going to come from AI, from energy transition, but it's going to be a bit longer, a bit later on than what the market thinks. And unfortunately, on the war, we think the war is in Ukraine is transforming itself into a war of attrition. It's going to take a bit much longer, actually, unfortunately. So we don't see any ceasefire or any real settlement or compromise anytime soon. On the other side, we focus very much on demand and supply of fixed income, especially government bonds. On the supply, we see a very, very strong supply, whether the US, which is going to be 3 times higher than the pre-pandemic, or Europe with, Germany having to spend on defense and an energy transition. We think it's going to be meaningfully higher than the pre-pandemic highs. On the other side, the real question, the real elephant in the room is the behavior of the central banks. Are they going to continue on the QT that they kind of announced? And on that, obviously, very important for us because the QT of the US has been really subdued by the balance sheet of the Treasury. But as we move into 2023, that will be over, and at the same time, ECB is coming into the play. And most importantly, the big question mark obviously remains the Bank of Japan inside the central bank environment. Obviously, Bank of Japan has been very prominent in sustaining a QE effort for 2022. The question is, are we going to move in 2023 with the phasing out of Kuroda? And does it mean that Bank of Japan is going to move into QT? That would obviously change very much the picture. We think eventually there's going to be much more supply than demand for government bonds, and inflation expectations are not going to be enough to create this massive buying. So overall, very cautious and a bit nervous on the overall fixed income market. Overall, we see the market to be very much range bound, definitely on the equity and fixed income side between a +5, -5, unless something very big happens on the macro side. And so we remain very focused on bottom-up analysis, on idiosyncratic play, and trying to really spot the good and bad credit and equity that we see in our sectors. Thank you.